Hello and welcome to everyone in the virtual classroom to learn case flow statement. Let us take one more practical question having some new points given in the question. Have a look. Data has been given for a period of 2 years as usual. One for the last year, that is 31st March 2019, and another for the current year, that is for the 31st March 2020. So two balance sheets have been given, one for last year, another for current year. Then additional information. 4 points have been given in this question for additional information. Let us start the cash flow and decide the net profit of the current year that we have to report under the first title, that is cash flow generated from operating activities. The two balances of profit and loss appropriation account. Have a look on the liability side, profit and loss account. Last year 20,000, current year 37,500. So difference between the two balances of profit and loss appropriation account given in the balance sheet. By this way, we were and we are deciding the net profit of the current year that we will be reporting under the first title of cash flow statement. But before we decide the profit of the year, let me draw your attention on additional information point number 2. I am reading it. Decided to value the stock at cost from the year 2019-20. Whereas earlier the practice was to value stock at cost less 10%. The opening stock was valued as per the practice existing at that time, while the closing stock was correctly valued at cost. This is a new point of the question and you are facing this type of point first time in this topic. Once again I am reading it. Decided to value the stock at cost. This word is very important, at cost, from the year 2019-20, the current year. Whereas earlier the practice was to value stock at cost less 10%. Earlier means last year the practice was to value the stock at cost less 10%. The opening stock was valued as per the practice existing at that time. Opening stock of current year, would be the closing stock of the last year. So it was valued as per the practice existing at that time, and at that time the practice was to value stock at cost less 10%, while the closing stock was correctly valued at cost. Closing stock of the current year was correctly valued at cost, but the opening stock was valued as per the practice existing at that time, and as I told you, that time the practice was to value the stock at cost less 10%. So opening stock was valued at cost less 10%, while the closing stock was correctly valued at cost. So in the year 2019-20, two different parameters have been applied for the valuation of stock, and that is why we need to give a rectification entry for the valuation of opening stock of the current year, or you may say closing stock of the last year, because two different set of parameters in the context of valuation of stock cannot be applied in the same year. So let us give an adjustment entry, a rectification entry for the valuation of opening stock of the current year or the closing stock of the last year, because it affects the profit of the year also. And that is why I told you, before we compare the two balances of profit and loss appropriation account to decide the net profit, that we have to report, and we will be reporting under the first title. This adjustment need to be considered first because it affects the profit of the year. So let us do it. Let us prepare a working note and give the rectification entry for the stock adjustment. Have a look. Working note number 1, stock adjustment. Last year, that is 2018-19, closing stock was valued cost less 10%. Last year closing stock, current year opening stock. So if cost, let us assume that the cost price was rupees 100, then it was valued cost less by 10%. 10% of 100 rupees is 10. That gives the book value of the stock 90 rupees. It means at this value the stock was valued in the books of account for the last year's closing stock or for the opening stock of the current year. Book value 90 rupees versus the cost was 100 rupees. Let us apply the equation. Now if book value was 90 at which the valuation was made, then original cost was rupees 100. If book value was rupees 1,08,000 given in the balance sheet also, what would be its original cost price? Apply the figure. That gives rupees 1,20,000 cost price of the stock of the closing stock of the last year or opening stock of the current year. So value of stock to be increased. New value as per our calculation rupees 1,20,000 minus old value given in the balance sheet rupees 1,08,000. That gives rupees 12,000. Valuation was made for rupees 1,08,000 cost less 10% price versus the original cost rupees 1,20,000. If you value the stock at its original cost price, it must be rupees 1,20,000. So how much value of stock to be increased? It is rupees 12,000. Let us give an adjustment entry for the rectification. For last year, stock account debited rupees 12,000. If you increases the value of the closing stock of the last year, you know the cascading impact will be there, that the balance of profit will get increased. So to profit and loss account credited 12,000 because you have increased the valuation of the closing stock of the last year by 12,000, and if you increases the value of the closing stock, other figures remains as it is. So obviously direct cascading impact would come on the balance of profit and loss account, and it will also get increased by rupees 12,000. That is why profit and loss account credited rupees 12,000. So now due to this rectification entry for 2018-19, what would be the new balances of closing stock as well as the balance of profit and loss account? New value of stock is rupees 1,20,000. Earlier it was 1,08,000 given in the balance sheet, plus impact of this adjustment entry plus 12,000, we debited stock account 12,000. So 1,08,000 plus 12,000, that gives 1,20,000, and the new balances of profit and loss account, earlier it was 20,000 given in the balance sheet, plus over here we credited profit and loss account 12,000. So 20,000 plus 12,000, that gives new balance of profit and loss account 32,000. Let me show both the balances once again, the original balances of closing stock and profit and loss account in the balance sheet. Have a look. Asset side stock, last year it was 1,08,000. Liability side, we already saw it, but once again profit and loss account, last year balance was 20,000. So 1,08,000 balance of closing stock of the last year, 20,000 balance of profit and loss account of the last year. Then we gave the rectification impact of the journal entry and we got the new balances 1,08,000 plus 12,000, new value of closing stock of the last year 1,20,000, profit and loss account old balance 20,000 shown in the balance sheet plus 12,000 as per rectification entry, that gives the new balance of profit and loss account 32,000. Now we can decide the net profit of the year because we already gave the stock adjustment entry and we decided the new balances of stock as well as the profit and loss account for the last year. Let us decide the profit of the year in the cash flow statement. Don't forget the new balance of profit and loss account of the last year is now 32,000 and the value of the stock for the last year is 1,20,000. Have a look. Cash flow statement. First title, cash flow generated from business operation or operating activities. Net profit of the year. Differences of balances of profit and loss appropriation account during period of two balance sheets. 37,500 balance of profit and loss of the current year minus 32,000 after stock adjustment, working note number 1 that we saw just over here. So 37,500 minus 32,000, that gives the net profit of the year rupees 5,500. Difference of balances of profit and loss appropriation account during period of two balance sheets. Profit of the current year 37,500 minus balance of profit and loss of the last year after stock adjustment entry, it is 32,000 and that gives the profit of the year 5,500. But instead of this option, I am also explaining another option to decide the net profit of the current year by taking the two original balances of profit and loss appropriation account from the balance sheet. See, two balances of profit and loss from balance sheet. Original balances, current year 37,500 given in the balance sheet minus original balance of profit and loss account of the last year given in the balance sheet. Last year it was 20,000 originally. So 37,500 minus 20,000, that gives net profit of the year rupees 17,500. I am explaining the second option to report the net profit of the current year. So we took the two original balances of profit and loss from the balance sheet, which were 37,500 for the current year and 20,000 for the last year, and that is why we got the net profit of the year 17,500. It means you took the two original balance without considering the impact of the stock adjustment of the last year. Now it was an opening stock of the current year. As per our working note number 1 that we prepared and we saw it, due to stock adjustment, value of closing stock of the last year or the opening stock of the current year has been increased by rupees 12,000. So let us consider the impact of this rupees 12,000. As I told you, closing stock of the last year would be an opening stock of the current year. तो इस साल के ओपनिंग स्टॉक की वैल्यू 12,000 से बढ़ानी है. And if you increase the value of opening stock of the current year, what would be the impact on the net profit of the current year? Other figures remains the same in the given trading and profit and loss account. Just you are going to increase the value of opening stock of the current year, which was closing stock of the last year. So if you are going to increase the value of opening stock by rupees 12,000 and other figures of trading and profit and loss account remains the same, it means आप ओपनिंग स्टॉक की वैल्यू बढ़ाएंगे तो जीपी कम हो जाएगा, एंड जीपी यू नो ऑलवेज वुड हैव बीन ट्रांसफर्ड टू प्रॉफिट एंड लॉस अकाउंट. तो अगर आपका जीपी कम हो जाएगा तो नेट प्रॉफिट भी 12,000 से कम हो जाएगा. सो अंडर दिस ऑप्शन, if the value of opening stock is to be increased by rupees 12,000, the cascading direct impact will come on the net profit. Your net profit will get reduced, will get decreases by rupees 12,000. So in this second option, in the context of opening stock of the current year, if the opening stock value is to be increased by rupees 12,000, it means your net profit will get decreases by rupees 12,000. तो इस साल के प्रॉफिट को 12,000 से कम करना पड़ेगा, and that is why under this option it has been shown like this: increases in value of opening stock. These are the two stars that has been given for this particular calculation. Increases in value of opening stock minus 12,000, we have to decrease the net profit of the current year by 12,000. Why? Because you have increases the value of opening stock by rupees 12,000, and that affects the profit of the year, and that is why increases in value of opening stock decreases the profit of the current year minus 12,000. So this 12,000 has been given in the context of this second option, जहां आपने बैलेंस शीट में से दो ओरिजिनल बैलेंस लेकर इस साल के प्रॉफिट को तय किया 17,500, और उसके बाद आपने ओपनिंग स्टॉक की जो वैल्यू बढ़ी उसकी वजह से जो नेट प्रॉफिट पर इम्पैक्ट आई, नेट प्रॉफिट कम हुआ, इसलिए आपने यहाँ इंक्रीज इन वैल्यू ऑफ ओपनिंग स्टॉक लिखकर इस साल के नेट प्रॉफिट को 12,000 से कम कर दिया. अल्टीमेटली क्या रहेगा? 17,500 माइनस 12,000, तो यहां भी अल्टीमेटली तो 5,500 ही रहने वाले हैं. सो फाइनल आंसर, द नेट प्रॉफिट, वेदर यू अप्लाई द फर्स्ट ऑप्शन और द सेकेंड ऑप्शन, दोनों का फाइनल जवाब तो 5,500 ही रहने वाला है, क्योंकि पहले ऑप्शन में 5,500 वाले ऑप्शन में ये आप 12,000 का रिपोर्टिंग नहीं करने वाले हैं, और दूसरे ऑप्शन में जहां आपने प्रॉफिट तय किया 17,500 का, उसमें आप ये सेपरेट रिपोर्टिंग करेंगे माइनस 12,000 का, तो वो भी अल्टीमेटली प्लस 17,500 माइनस 12,000, तो वो भी अल्टीमेटली तो प्लस 5,500 ही होने वाला है. चॉइस इज योर्स. Which option is to be applied, that you have to decide. I have explained the two options. You have to select any one out of these two options to decide the net profit of the current year, which is ultimately 5,500. I hope it would be very clear in your mind. This point was very important. It was a new point of this question. After the stock adjustment, let us start. Let us read the additional information. Point number 1, which is related with RPS redemption. Point number 1, during the year 2019-20, preference shares of rupees 50,000 amount has already been given, worth rupees 50,000 were redeemed at 5% premium. This was done partly by creating capital redemption reserve from profit and partly by issuing new equity shares of rupees 30,000. This new equity shares were issued at 10% premium. The premium on redemption of preference shares was made out of the premium received on issue of new equity shares. RPS redemption. In the last video lecture number 3, in which we took question number 4, I have already explained the provisions of Companies Act related with RPS in detail. So you know it very well. Over here, each and everything related with this redemption of RPS has been given very clearly. Preference shares of rupees 50,000 were redeemed at 5% premium. Now, how the provisions of Companies Act have been implemented in the context of redemption of RPS, you know, two options can be applied, and here company has applied both the options simultaneously for the RPS redemption. This was done partly by creating capital redemption reserve from profit and partly by issuing new equity shares of rupees 30,000. Nominal amount of RPS redemption 50,000. CRR has been created from the profit and the remaining partly by issuing new equity shares of rupees 30,000. So let us verify the balance of CRR if given in the balance sheet to verify this instruction. Have a look on the liability side. Yes, capital redemption reserve is there. No opening balance and closing balance 20,000. It means during the current year, company has created this CRR for rupees 20,000 in the context of redemption of RPS and the remaining 30,000 by issuing new equity shares. This is the equity share capital account. Balance of last year 1 lakh, balance of current year 1 lakh 30,000. So it indicates a new issue of rupees 30,000. So by this way, from profit, by creating capital redemption reserve 20,000, it is there in the form of closing balance versus no opening balance, and by made a fresh issue of rupees 30,000. So 20,000 plus 30,000, that gives the required amount 50,000. So company has utilized both the option from accumulated profit, from distributable profits. 30,000 has been utilized. Over here directly company has created this CRR from profit. It doesn't make any difference. Normally you know GR, जिसको हम कहते हैं accumulated profit, distributable profits, which is otherwise available for the dividend, ये हर साल के प्रॉफिट एंड लॉस में से ही सेविंग करके ट्रांसफर करके बनाया जाता है. So whether you say from accumulated profit, from distributable profits which is otherwise available for the dividend, or directly if you create it from profit, both are same. And that is why creation of CRR is compulsory with the same amount as per the Companies Act provision for RPS. And that is why over here company has created CRR from profit for rupees 20,000 as we saw in the balance sheet, and remaining 30,000 by issuing new equity shares with 10% premium. The premium on redemption of preference share was made out of the premium received on issue of new equity shares. Let us implement this discussion, this explanation in the form of a working note for RPS redemption. Have a look. Working note number 2, redemption of preference share capital. Preference shares of rupees 50,000 has been redeemed with 5% premium. So how much total amount required for redemption? nominal amount of RPS, that is 50,000, redemption premium on RPS 5% of 50,000, that is 2,500, total amount required 52,500. Let us prepare a chart. Planning of redemption. Total amount required rupees 52,500, having two components. Nominal amount of RPS 50,000, redemption premium on RPS rupees 2,500. So we gave the bifurcation of the total amount required because provisions of Companies Act are different for both the components, and that is why we gave the bifurcation. Now nominal amount of RPS 50,000. How company has made an arrangement for this required nominal amount? From profit and loss account, you know the word was from profit. So from profit and loss account, 20,000 transferred to CRR account as we already saw in the balance sheet. For the remaining amount, company has made an issue rupees 30,000. So from new issue, rupees 30,000 with 10% premium. So this was for the nominal amount of RPS 50,000. Company has applied both the available options under Companies Act and made an arrangement for rupees 50,000. While redemption premium on RPS rupees 2,500 instruction has been given in the question itself, we already saw it in additional information point number 1 that it was made out from the share premium, security premium, from share premium account. You know, over here this equity issue of rupees 30,000 is there with 10% premium. So company will be receiving rupees 3,000, 10% of 30,000, 3,000 company will be receiving in the form of share premium, and we need only 2,500 for this redemption premium. So sufficient amount is available in the share premium account. Let us pass the journal entry for this planning of redemption one by one. Journal entries for RPS number 1. Preference share capital account debited 50,000, redemption premium on RPS account debited 2,500 to preference shareholders account credited 52,500. This was for the decision of Board of Directors for redemption of RPS. Second, profit and loss account debited rupees 20,000 to capital redemption reserve account credited 20,000. Third, for the new issue, bank account debited rupees 33,000 to equity share capital account credited 30,000 to share premium account credited rupees 3,000, 10% of 30,000, 3,000. Let us write off the redemption premium on RPS from share premium account. Share premium account debited 2,500 to redemption premium on RPS account credited 2,500. Provisions have been fulfilled, payment can be paid. So last journal entry for the payment, preference shareholders account debited rupees 52,500 to bank account credited rupees 52,500. So these were the journal entries for the RPS redemption. Let us give the posting of this journal entry in the concerned ledger accounts related with RPS redemption. We pass first journal entry. Preference share capital account debited rupees 50,000. Redemption premium on RPS account debited rupees 2,500 to preference shareholders account credited rupees 52,500, opposite amount and opposite narration, to preference share capital account 50,000 to redemption premium on RPS account 2,500 total 52,500. Then we pass the second journal entry. Profit and loss account debited to CRR, that is capital redemption reserve account, credited rupees 20,000. Opposite narration, profit and loss. We pass the third journal entry for the new issue made. Bank account debited 33,000 to equity share capital account, credited 30,000 to share premium account, credited rupees 3,000. Fourth journal entry. Share premium account debited 2,500 to redemption premium on RPS account, credited rupees 2,500. And the fifth journal entry was for the payment. Preference shareholders account debited to bank account, credited 52,500. So this was the posting of the journal entries related with RPS redemption. Let us close the account and give the cash flow statement impact. First, preference share capital account. Opening balance was 80,000. Closing balance was 30,000. Redemption has been made for 50,000. Account is over 80,000. Share premium account. No opening balance versus closing balance 50,000. We got 3,000 in the current year, out of which 2,500 rupees has been utilized for redemption premium on RPS. Account is over 3,000. Redemption premium on RPS, no opening balance, no closing balance, it's over 2,500. Preference shareholders account over 52,500. Then CRR account. No opening balance versus closing balance 20,000. This is the posting which has been made in the current year from the profit. So 20,000, no balancing figure. Equity share capital account. Opening balance 1 lakh, closing balance 1,30,000. This is the posting of the issue of the current year, 30,000. Total 1,30,000, it's over. Cash flow impact. We close the 6th ledger account. How does it affect the cash flow statement? Let us verify all the 6 ledger accounts once again, one by one. Preference share capital account. Nothing is there, the word like bank or profit and loss, so does not affect the cash flow statement. Redemption premium on RPS, nothing is there, the word bank or profit and loss does not affect the cash flow. Share premium account, we got rupees 3,000 having a narration bank. So due to fresh issue, we got rupees 3,000 in the form of share premium. But with equity issue amount 30,000, we will report this entire amount 33,000 under financing activities. 30,000 for equity issue and 3,000 share premium, total 33,000 under title C, financing activities. Preference shareholders account. Debit side title came bank 52,500. It indicates cash outflow, cash payment. Under financing activities, we will report this cash outflow for redemption of RPS minus 52,500. The remaining 2 ledger account related with this process of RPS redemption. CRR account. On the credit side, title came profit and loss. Reserve created from the current year's profit, but it is a non-cash item. You know the journal entry. Profit and loss account debited to CRR account credited. It's a non-cash item, and that is why should be and will be added back in the current year's net profit under the first title. An equity share capital account. On the credit side, title came bank as I already told you in the share premium account verification time, it is due to fresh issue. We got 3,000 in the form of share premium. So 30,000 plus 3,000, this total 33,000 will be reported under financing activities. Let us report it. Cash flow statement. Have a look. Title A, cash flow generated from business operation or operating activities. We already decided the profit of the year. Now adjustments for non-cash and non-operating items. First item, transferred to CRR plus 20,000. Then under financing activities, let us report the fresh issue as well as the redemption amount. C, cash flow generated from financial activities or financing activities. Redemption of RPS with premium minus 52,500 minus is assigned for cash outflow. Then issue of equity share with premium plus 33,000. 30,000 for the issue amount and 3,000 for the premium. Total company got 33,000. So this was the impact for the RPS related process in the cash flow statement. After this, let us verify the additional information once again for the remaining points of the question. Point number 3. One of the fixed assets costing rupees 50,000. The word is costing. Rupees 50,000 on which accumulated depreciation is rupees 10,000. Accumulated depreciation is rupees 10,000. Has been sold for rupees 45,000. Here two words are very important. Fixed assets costing and accumulated depreciation. So let us verify the balance sheet, whether company follows the depreciation fund system or not. Have a look on the liability side. Third last item, depreciation fund on fixed assets. Opening balance 48,000, closing balance 1 lakh. While fixed assets, asset side, first item, fixed assets 2 lakh, opening balance 250, closing balance. It means company follows the depreciation fund system, and that is why original cost as well as the accumulated depreciation, these words were given in that point number 3. So let us prepare a working note for this particular item. Working note number 3, sale of fixed assets. You know how the depreciation fund system is working. We already discussed the important characteristics of the depreciation fund system in our previous questions. Original cost of the fixed assets rupees 50,000 less accumulated depreciation so far rupees 10,000. That gives written down value in the current year rupees 40,000. Versus selling price as given in that point number 3, 45,000. That gives the profit rupees 5,000. So due to sale of this fixed assets, company has earned a profit of rupees 5,000. From the original cost, we deducted the accumulated depreciation. इतने सालों का इकट्ठा किया गया depreciation जो depreciation fund की opening balance में बना है 10,000. We decided the written down value 40,000 and then we compared it with selling price 45,000 and we got the profit 5,000. Let us pass the journal entry. Number 1, bank account debited 45,000, depreciation fund account debited 10,000, to fixed assets account credited 55,000. So we credited 55,000 versus its original cost price 50,000, because over here we included the profit also in this figure of 55,000, and that is why the second journal entry for the transfer of profit, fixed assets account debited 5,000, To profit and loss account credited 5,000 for transfer of profit. Remaining third and fourth journal entry for the balancing figure of fixed assets account for the purchases and depreciation fund account for the current year's depreciation. Let us give the posting of this journal entries in the concerned ledger accounts. Have a look. Fixed assets account. Opening balance 2 lakhs, closing balance 2 lakh 50,000 as we already saw it in the balance sheet. Depreciation fund account, opening balance 48,000, closing balance 1 lakh. Now posting of first journal entry. Bank account debited 45,000. Depreciation fund account debited 10,000. 2. Fixed assets account credited 55,000. Opposite amount, opposite narration. While in depreciation fund account we debited 10,000. Opposite narration, fixed assets account, transfer of depreciation. Then second journal entry for transfer of profit, fixed assets account debited 2. Profit and loss account credited 5,000. Close the account and find out the balancing figure if any. Total of credit side looks bigger, 3,05,000. Put it on the debit side and we are getting a balancing figure of rupees 1 lakh. Apply the common accounting sense. It must be the purchases made in the current year. Journal entry, fixed assets account debited 2. Bank account credited 1 lakh. Close the depreciation fund account. Debit side looks bigger, 1 lakh 10,000. Put it on the credit side, 1 lakh 10,000. That gives a balancing figure of rupees 62,000 on the credit side, and it must be the current year's provision, profit and loss account debited to depreciation fund account. You know it very well. Under the depreciation fund system, हर साल का depreciation debit तो profit and loss में ही होता है, मगर क्रेडिट दी जाती है depreciation fund system में. So we close the two ledger accounts related with this transaction. Cash flow impact. Fixed assets account. On the credit side, title came bank. Selling of fixed assets 45,000 under title B, investing activities plus. On the debit side also title came bank. 1 lakh indicates purchases, cash outflow under same title B minus. Then over here on the debit side title came profit and loss. Company has credited this profit 5,000 to profit and loss account. Yes, profit has been received in cash, but it is a non-operating transaction. कोई भी बिजनेस का ये बिजनेस ऑपरेशन नहीं हो सकता कि हर दिन फिक्स्ड एसेट्स को बेचते रहे. इट हैपन्स वंस इन अ व्हाइल. सो इट इज अ नॉन ऑपरेटिंग ट्रांजैक्शन, नॉन ऑपरेटिंग इनकम जो इस साल के प्रॉफिट में समाई हुई है, और हमें तो सिर्फ बिजनेस के ऑपरेशन में से मिला हुआ कैश प्रॉफिट चाहिए, और ये है नॉन ऑपरेटिंग ट्रांजैक्शन. तो इसको इस साल के प्रॉफिट में से हम निकाल देंगे अंडर द फर्स्ट आइटम. While the depreciation fund, on the credit side we got title profit and loss, current year's depreciation. Depreciation is always a non-cash item, you know it very well, and being a non-cash item, it would be added back in the current year's profit once again under the first title. So 2 impact under the first title and 2 impact under the title B, investing activities. Let us report it. Cash flow statement. Title A, cash flow generated from business operation or operating activities. Have a look. Profit on sale of fixed assets minus 5,000. ये हमने निकाल दिया क्योंकि कंपनी ने प्रॉफिट एंड लॉस में ये प्रॉफिट को क्रेडिट किया था. Depreciation of the current year plus 62,000. As a non-cash item, we added back it in the current year's profit. Then title B, investing activities, cash flow generated from investment activities or investing activities, sale of fixed assets plus 45,000, then purchases of fixed assets minus 1 lakh. So this was for fixed asset transaction, point number 3 of additional information. Let us verify additional information once again for the last point of the question. Point number 4. Proposed dividend of the last year was paid and taxes of rupees 35,000 of last year also paid. 2 transactions have been given, one for proposed dividend and another for income tax. Let us take one by one. Proposed dividend first. Last year's proposed dividend. Let us verify, balance it for the amount. Have a look on the liability side. Last item, proposed dividend, 10,000 last year, current year 12,000. We already discussed the provisions of Companies Act related with proposed dividend, so you know it very well. ये कहा है तो भी करना है, नहीं कहा है तो भी करना है. Those two lines, last year's proposed dividend would have been paid in the current year and the current year's proposed dividend will be paid in the next year. So provisions of Companies Act are very clear and that is why ये कहे तो भी करना है और ना कहे तो भी ये करना है, because it is related with provisions of Companies Act. First J, for the payment of proposed dividend of the last year, proposed dividend account debited 10,000 to bank account credited 10,000 paid. Then closing balance was given rupees 12,000. It is the current year's proposal. Profit and loss appropriation account debited 12,000 to proposed dividend account credited 12,000. Let us give the posting in the concerned ledger accounts. Proposed dividend account. This is the proposed dividend account. First J, proposed dividend account debited to bank account credited 10,000, opening balance 10,000, closing balance 12,000. Total of debit side 22,000, put it on the credit side 22,000 and we are getting a balancing figure of rupees 12,000 on the credit side. What it could be? It is the current year's proposal for the proposed dividend, which is lying in the form of closing balance at the end of the year. Profit and loss appropriation account debited to proposed dividend account credited, current year's proposal. Cash flow impact. Debit side title came bank, it indicates cash outflow. Under title C, financing activities minus. Credit side title came profit and loss. It's a non-cash item and that is why will be added back under the first title plus 12,000. Let us report it. Under the first title, proposed dividend of the current year as a non-cash item, add back 12,000. While payment of rupees 10,000. Last year's proposed dividend has been paid. So under title C, proposed dividend of last year paid minus 10,000. Now another point given in the question, additional information, point number 4 related with income tax. Have a look. Taxes of rupees 35,000 of last year also paid. Let us give a small working note for income tax related transaction. Last working note number 5, provision for tax. Income tax provision account debited 35,000 to bank account credited 35,000 paid in the current year. Then current year's provision, once you close the ledger account of income tax provision, you will get the balancing figure on the credit side, which would be the provision of the current year and the journal entry for that profit and loss account debited 45,000 to income tax provision account credited 45,000. Ledger account impact. Income tax provision account. This is provision for tax. Opening balance 40,000, closing balance 50,000, payment of 35,000, provision for tax account debited to bank account credited. Total of debit side looks bigger, 85,000. Put it on the credit side. That gives the balancing figure of rupees 45,000, which must be the provision made for the current year from the profit and loss account. It's a non-cash item. Profit and loss account debited to income tax provision account credited current year's provision. Cash flow impact. Debit side title came bank indicates cash outflow. This will be reported under title A but as a last and separate item, जिनको हम कहते हैं पेंडिंग लिस्ट आइटम. जब लास्ट में टोटल करते हैं कैश फ्लो का, तो once you decide the cash flow from operating activities, then this would be the last and separate reporting under title A. Once you do it, then you will get the net cash flow from operating activities. This title came profit and loss as a non-cash item will be added back under title A. Let us report it. Title A, income tax provision of the current year, being a non-cash item, income tax provision plus 45,000. Then payment. Under title A as a last and separate item, जब आप ये तय करोगे कैश फ्लो फ्रॉम ऑपरेटिंग एक्टिविटीज, उनके बाद ये लास्ट सेपरेट रिपोर्टिंग करना है, लेस इनकम टैक्स पेड माइनस 35,000. Additional information got over. Let us verify the balance sheet for the remaining item. Balance sheet reading. Verify. Let us come on the asset side first. Fixed assets already over. Investment 40,000 versus 60,000. What does it mean? It means during the current year, company has purchased an additional information of rupees 20,000, additional investment of rupees 20,000. Investment account debited to bank account credited 20,000. So it indicates cash outflow of rupees 20,000. Under title B, investing activities, purchases of investment minus 20,000. Once again, balance it. Asset side, after investment, stock, don't forget, now balance is not 1,08,000 after stock adjustment, it is 1,20,000. Stock and debtors item of current asset that we will report under the first title, but after deciding cash profit from business operation. Cash and bank balance को हम लास्ट में वेरीफाई करते हैं. Wait. Come on the liability side. Equity share capital already over. Preference share capital over. Security premium over. Capital redemption reserve over. Reserve fund, normally इनको कहते हैं general reserve. Opening balance 50,000. Closing balance 60,000. What does it mean? इसका मतलब ये हुआ कि कंपनी ने इस साल में 10,000 का एडिशनल सेविंग किया है. Profit and loss appropriation account debited to reserve fund account credited 10,000. So it can be understood like this also. Alternatively, you may prepare a ledger account also for this reserve fund account. Have a look. Reserve fund account, opening balance 50,000, closing balance 60,000. Debit side looks bigger, total 60,000. Put it on the credit side 60,000. That gives a balancing figure of rupees 10,000 on the credit side. Current year saving, profit and loss appropriation account debited to reserve fund account credited, merely transfer. It's a non-cash item and that is why should be and will be added back in the current year's profit under the first title. Transfer to GR. rupees 10,000 plus. Once again, balance sheet verification. After reserve fund, remaining items. Profit and loss account, we already reported it and decided the profit of the year. Creditors item of current liabilities, weight. Provision for taxation over. Depreciation fund on fixed assets over. Bad debt reserve, we will report it as a current liability, weight. Proposed dividend over. So stock and debtors. These are the two items of current assets. Once again, I am repeating, now it is not 1,08,000 opening balance or balance of last year, it is 1,20,000 and the current year 1,50,000. And two items of current liabilities, creditors and bad debt reserve. Let us decide the cash profit and then we will report these changes in CA and CL. Profit, then adjustments for non-cash and non-operating items. Total of these 6 reporting, excluding opening stock 12,000, would be 1,44,000. So 5,500 profit plus 1,44,000, that gives the cash profit before changes in working capital 1,49,500. If you have selected this option to decide the net profit of the current year 17,500, then you need to consider this 7th item also, increases in value of opening stock minus 12,000. Then the impact or effect of these 7 items, adjustments for non-cash and non-operating, the total of which would be plus 1,32,000. That also gives the final answer, cash profit generated from business operation before changes in current assets and current liabilities 1,49,500. So both answer remains the same, whether you have selected first option to decide the net profit of the current year or whether you have decided the second option to decide the net profit of the current year, आपका कैश प्रॉफिट फ्रॉम बिजनेस ऑपरेशन सेम ही रहता है. Let's give the second sub reporting under the first title, changes in working capital or changes in current assets and current liabilities. Increases in CA, namely stock. Increase is the cash flow, decrease is the cash flow, it is a negative relationship. So increase is in CA, namely stock, apply the negative relationship. Decreases the cash flow 30,000. Decrease is in CA, debtors, negative relationship, increase is the cash flow plus 12,000. Now current liabilities, increase is in CL, creditors, positive relationship, increase is the cash flow plus 10,000. Decrease is in CA, namely bad debt reserve, decrease is the cash flow minus 2,000. Net change, net impact of these 4 items of changes in CA and CL minus 10,000. Earlier cash profit from business operation was 1,49,500 and now this minus 10,000 of changes in CA and CL. That gives the cash flow generated from operating activities and it is 1,39,500 plus. Less income tax paid minus 35,000 as we already saw it earlier. That gives the final answer of net cash flow from operating activities A plus 1,04,500. Total of B, 3 items are there, the total of which is B minus 75,000. Total of C, financing activities, 3 items are there, the net cash flow from financing activities C minus 29,500. So we got the answer of A, B and C. Final picture, net cash flow of entire business unit, or you may say increases or decreases in cash flow during the current year. So net cash flow of entire business, how to decide it, you know it very well. A plus B plus C, जो 3 फिगर हमने तय किए, आंसर इज नील. A plus B plus C नील. Add opening balance of cash and bank. Let us verify the opening as well as the closing balance of cash and bank from the balance sheet. Last item on the asset side, cash and bank balance, opening balance 1000, closing balance is also 1000. Let us add the opening balance rupees 1000. So add opening balance rupees 1000, nil plus 1000, that gives the closing balance of cash and bank rupees 1000, as we already saw it in the balance sheet of the current year. It was there in the balance sheet, closing balance of cash and bank 1000. It means our answer is a correct answer. It is a true answer. We got it confirmed. It was given rupees 1000 in the current year's column of balance sheet. So this was the process that we followed to get the final answer of closing balance of cash and bank. Let me draw your attention for this note, dear students. Additional information, point number 2. For stock adjustment has been explained by two-way with red font under first title, that is operating activities. You have to select any one of them in your solution of question, and also see working note number 1 on slide number 10 of this presentation. I already explained that in detail in the beginning of this video lecture. So we got the final answer. Stock adjustment was a new point of this question. RPS, though we already saw it in our last lecture, but over here company has applied both the available options for the redemption of nominal capital amount of the RPS. That was also a good point. I hope everything would be very clear in your mind for this question. Thank you. Thank you very much for your peaceful listening.